Hello, fellow traders. Tis I, TheRumpledOne, coming to you on Friday, October the 11th. The year's 2024. Let's talk trading. Weekly wrap-up. These videos are for educational purposes only. Your results may differ from mine. And a reminder as we wrap up the week, always have your risk management in place. Never lose more than you're willing to lose on any one single trade. Taking a look at the weekly chart, the dashboard tells us all the gaps have filled. It seemed like, let's see, everything but the pound yen gapped down. And the pound dollar is about 20 pips below that weekly open, 74 off the high, 40 off the low. We take a zoom out to the month, we can see we're 305 pips below the monthly open, 329 off that monthly high, and 39 pips off the low. And the dashboard tells us, and so do our eyes, that we are in the lower wick zone of the previous month. And looking at the opening range chart here, it looks like we're trying to get inside, or we are inside the opening range for the week. You can see we touched the weekly open, retraced off of it. We open below the opening range for the week. We are below the opening range for the month, above the opening range for the year. Speaking of year, we're 350 pips above the yearly open, 373 off the high, 762 off the low. And 3 days ago, we had an inside bar on the daily. And yesterday, we broke through. Actually, we opened below it. But we extended it. And today, we're putting in an inside bar so far. And there seems to be lots of inside bar action according to the dashboard. For the range, only one pair over 100 pips. That'd be the beast, also known as the pound yen. It looks like the pound dollar only has a range of 40 pips. That's very anemic. It's extremely anemic. Euro dollar only has a range of 30. So that's anemic. And it looks like the dollar yen's moving back. It has a range of 86, and it's above the 149 mark. Just take a quick gander at that chart. So yeah, you can see it's pushing back up. But it looks like we're going to have an inside bar, so you might want to look for the yen to come back down. Got this big range bar here. So even though it's on the daily, big range bars still work. Speaking of big range bars, I see one right here. I wonder if I should add that indicator to this chart. Maybe not. Let's keep it clean. Can use that on a different chart. Speaking of charts, we got the buy zone here. And in fact, there was a trader who asked me about the buy zone and having it set for 7 pips above and below the open. And you can use the buy zone indicator and do that. Or I said use TRO HL5 because that does so many things. And you can see here the daily opens below the weekly open. And so we're in the area I like to call no man's land because you don't have a clear signal. Right here, it hit that weekly open but couldn't close above it, so it started coming back down. We've never hit the short trigger. We did cross below that daily open once. So this is just I don't like to trade within here. I really don't. not for, if I do, it's only going to be for just a pip or two, because I just don't trust the price action in here. It just seems to be hard trading. You can still do it, but it's just something to be aware of, and take the profits when you see them. And as you can see here, the range is too low for the rat zone, and that's just another reason why this is kind of dangerous. You don't have that range. And looking at the trading plan, Bambino Flex indicator said to trade north. The pivot trading plan said to trade south near R1 or the pivot. And it definitely, price came up to the pivot and then came back down through it, then back up through it, then back down through it. And then here in this last attempt, it seemed like it was a little anemic. And didn't push down very far. On the pivots, we've taken out the daily. So for the month of October, so far, no missed daily pivots. Though we do have a missed weekly pivot right here this week. Nowhere near it. Missed it by 69 pips. And for the month, we've taken out the pivot. So we got a weekly pivot hanging out here. We'll just have to see what happens. Since yesterday's daily candle was pretty much nothing but wicks, that's what we see here. We see price just going in between, it's hanging out in that wick zone. Once again, price usually doesn't like to stay or close inside the wick zone. But when you see, this much shaded area, meaning the previous day's wick, once again, sometimes you have to trade what you see. And what I see is price is probably not going to break the previous day's high or low unless something big happens. So trade accordingly. For the week, only 113 pips. Am I sure it's Friday? 113 pips, that's like about as low as it's gotten. That's pretty sad. We didn't get anywhere near that high. Previous week's high. We broke out of the previous week's low by 48 pips. And for you rats, 70 pips off the weekly high, 44 off the weekly low. Weekly crossover traders, 54 high minus open and 60 open minus low. So that weekly open crossover paid off a few times this week. And the price action, the simple chart here, you can see here we did a psychological 75. To the north it was good for about 5 pips. You can see here to the south it was good for, it looks like, at least 5 or more pips. And you can trade it that psychological. Here we had an outside bar, failed to close above the psychological, take that break to the downside. And people could call this hindsight if they want, but this is what we do. We see an outside bar, inside bar, you start taking those breaks. You see a psychological, you take the crossover. Nothing's changed in over a decade or two. This is just, this is just pure price action trading. It's not difficult. What makes it difficult is if you don't have a plan, if you don't have your risk management in place, then you wind up getting yourself in trouble. You can look to the left. Don't have very many closes above this line here. So at least not today, and the way it ended, yesterday. So It's obvious in hindsight, but you can use that hindsight to trade in the moment. And that's what we all do. We trade in the moment. And the higher low, lower high with some 3-ball support and resistance lines you can see here. We had the highest low at this level. Price just kept breaking down through it. You know, pick up a couple of pips here and there. 2-ball. And the funny thing is, this is a 1-minute chart. And you can look at these flip-flop boxes, but they were not paying off very easily today. Because once again, muted range, only 40 pips. And you can see here this break from a couple minutes ago, up over 2 pips. That looks like a big range bar to me. Came down to that open. So like get that big range bar, you don't even need the indicator, just use your eyes. And you can just look, okay, this is a big range bar. What happened? Price came back to that open, put in another big range bar. Price came back to that open. Once again, trading what you see. You know, here's a huge big range bar, right? That's a big range bar. And then what happened? Price, you know, returned to that open level. I don't know what to tell you, traders, but, you know, you just have to trade what you see. And let's see, somebody was asking about statistics. Once again, if you're doing intraday trading, it's just knowing when the range is most likely going to be the highest and trade during those hours and try to avoid the hours where you don't have much range. And this is just for the pound. So maybe if you switch to a different pair, these would be green and these would be red. Probably if you're trading a yen pair, these would probably have a chance. But in comparison, I mean, most of the trades happen, you know, during that New York-London crossover. That's where you get a lot of action. And speaking of action, range by month for October, 369. So we haven't pushed the year-to-date accumulated range. We already know that, but for those who just might be tuning in for the first time, let's just display it. So we pushed the boundaries in September. We haven't done so in October. But you can see we're above a couple other years, so this isn't the lowest. So we're looking at 20 years worth of data here. And for the weekly reminder, let's see, what do we have? We're below the previous week's lower wick zone, sellers strong control, below the previous mid, below the pivot, fade pivot, but you know we missed that weekly pivot, so that's something to think about for the rest of the month. We take a quick look at the month. Sellers strong control, and we are below the previous mid, cross below the previous mid. We're below the pivot, and we cross below that pivot, lower high, higher low, inside bar for the month so far. We drop down to the daily. Price between the wick zone, and there wasn't much. The wick zone, or not much of a candle body, remember. And doesn't look like we've got any telling us that anybody's in control. So, fellow traders, fastest 15 minutes in trading is just about over. Hope all you traders had a profitable day, week, month, year so far. And I'm going to wish you a fun and safe weekend. Be careful out there. You just never know what these crazy people might do. So, when you come back to trade, I want you to always remember and never forget. It's not what you trade, it's how you trade it. So go out there and drain the banks. This is the Rumpled One, over and out.